Hey, what's going on, guys? Max here with Because Bitcoin, and today we're going to be talking about USDT dominance, and I'm going to be providing a pretty comprehensive breakdown and actually an update to one of my more popular videos. It's a thesis that I came up with maybe about 6 to 8 months ago. It was basically a stablecoin dominance channel, and it included USDT and USDC, but market conditions have materially shifted over the past 6 months or so, and I would say that the last thesis that incorporates USDT and USDC has become partially invalidated and is probably due for an update. So it's a new channel that I think should probably provide some really nice navigation moving forward. You guys might be familiar with this one. We've talked about this before. So maybe you've seen this on my Twitter or you watched the previous video. If not, we can maybe include a little pop-up of it. But basically it's USDC and USDT as a ratio against the total crypto market cap. Now, why USDC and USDT? Well, for one, they're the two largest stable coins. So basically, I was just tinkering around with it a long time ago, and I said, all right, well, maybe we could come up with sort of a barometer or a gauge for the crypto asset class or the crypto market participants trading the asset class, their appetite to hold stable coins. USDC or USDT are the most common, of course, as the two largest, versus volatile crypto assets, just anything within the total market cap, total crypto asset class market cap. So what we did is, we figured, all right, it would have an inverse relationship with total, of course. So you're either holding stables or you're holding crypto assets that are, moving up and down. So if you flip it, it actually looks somewhat similar. So for example, let's just put up total and we'll put it on the bottom here. And I guess we'll just hide RSI and stochastic. We'll put this in log, and you can see that there's certainly some signal to be derived from it. I'm just going to give a really quick summary. I know some of you guys have already seen it, but I think it can be helpful given that we're going to be changing things up a bit here. It can definitely be helpful just to go over what we were looking at before. So we'll just quickly look at it, marking out previous tops when this channel, the USDC and USDT as a ratio against the total, reached this top line. It was basically the top. It was the distribution over here. Second top over here. Actually, we can do bottoms too, right? These two bottoms, whenever we hit the buy it all line, the bottom line, right before the last bull market, and then also the COVID capitulation, and even going further back, right, where the channel first began, which is very interesting. We had this top formed here. Buy it all line was basically right after the Luna collapse. And now we're basically pushing up against the sell it all line right here. And we've arguably been distributing for months now. So you can see that this channel has really worked wonders in calling tops and bottoms for crypto. There's only one issue, is I think that it's potentially invalidated. And I've been keeping a close eye on this. I actually put out a tweet about this maybe about a month ago or so as to why I think it's invalidated. And I think it's time to do a video. As crypto is starting to move back up, Bitcoin's now back around 30K. ETH is holding support, trying to move off of 1650, 1700. We're seeing names like Solana absolutely tearing. I think it's time that I provide a more comprehensive analysis in the form of a video to follow up with my tweet. So anyways, this is, if this is still valid, I guess we are at the sell it all line. We've been here before. This could be the top, but I'm going to explain to you why I think it's invalidated. So this invalidation or potential invalidation, we don't know for sure yet, sort of a lasting effect of what happened after the Silicon Valley Bank collapse. Now, I saw somebody on Twitter posting about how crypto is imminently failing because USDC's market cap has been going straight down, and it's everybody's looking for redemptions and they just can't wait to get their money out. And I said that's just simply not true, because look at what's been happening here. At that very same time, USDT's market cap has been going straight up. So let's figure out when that actually happened, right? Well, we know that first to second week of March, that weekend, that Silicon Valley Bank, we didn't know if it was going to be bailed out or not. you can see what happened here. And again, for those that didn't follow it closely, the Spark Notes version, the real quick version of what happened was the USDC had, I believe it was 5 or 7% of their corporate reserves, their treasury stored at Silicon Valley Bank. So before we knew whether Uncle Sam was going to step in and insure the depositors and bail out the depositors above and beyond the FDIC insured amount of 250K per depositor, we're like, okay, well, it was like 5 or 7% of USDC's backing could potentially be gone. So USDC for that weekend depegged from the dollar. It was not trading at a 1-to-1 parity with the US dollar anymore. It was trading at like 94 cents, give or take, on the dollar, because we figured, well, roughly that amount of its reserves are gone. So, okay, I guess it's worth a stable coin that's worth 94 cents on the dollar. So I think this was a pretty big turning point. And you saw a lot of people saying, you know what, USDC might be the most legit stable coin, but it almost might be too legit in this environment for its own good. So we saw, upon the collapse of Silicon Valley Bank, you saw people, my opinion, you could present me with evidence for something else. Clearly, there was a turning point here as soon as we got to March, and people were spooked and they didn't want to take a chance with USDC anymore. So they converted their stablecoin holdings into Tether. So why does my model become potentially invalidated? Well, it doesn't necessarily become invalidated, but it doesn't carry as much weight, because from this high set before on USDC going down to USDT, and bear with me, guys, I got a new channel for you, so you're going to want to stick around to see it, because it's good. It's good, and it's bullish, all right? But I want to paint the full picture. So you can see during this time, we've increased the Tether USDT market cap by 13.5 billion, depending on where you want to measure it, right? And at the same time, USDC has gone down over 18 billion. So what does this all mean? Where am I going with this? Why is my model invalidated? Well, again, it's not really invalidated. It's more just so it doesn't carry as much weight. We don't care as much about USDC anymore because it's been in free fall. Why would we care so much about USDC, and why would we care to include it in our calculations when it's shedding market cap and its competitor, the two part of this right here, this channel, is going up? I think it's skewing the data. I would like for them to move more so in tandem with one another, just as they always have. They're moving up together here, and they're moving down together here. So they are diverging from one another, and it's throwing off the weight of the equation, right? We're seeing something different. We really just care about USDT right now. We don't care about USDC anymore, at least until this starts, maybe they begin, maybe this moves sideways or down, and then this comes back up. Then we can bring it back. We're not going to throw it out entirely, but in this environment, it doesn't make sense to carry on with USDC. So I'm considering this channel potentially invalidated given current market conditions that we've seen since March. Now, where do we go from here? We're simply going to look at USDT as a ratio divided against the total crypto market cap. Or another way to look at it is more or less USDT dominance. All right. But this is basically what we're looking at, is Tether as a ratio against the total crypto market cap. We've got a new channel here, and it looks very similar to this one, but we got a little bit more room to the upside. So let's go through like we did the first time, and let's use Bitcoin. So we're going to go through and we're going to mark out these tops first here. All right, so this blue dot, we were at the sell it all line, the red line. You can see what happened after. Next, nice bear market rally, sell it all line. You can see what happened after. Bear market rally, we're at the sell it all line. You see what happened after. We'll come back and do the purples after. Now this is big distribution, right? But more or less right in the middle. Okay, sell it all line. You can see what happened after. When Bitcoin went to 69K, we were at the sell it all line, the red line. You see what happened after. Now let's mark out the purple. All right, so COVID crash was a good bottom there. Luna collapse We are at the buy it all line, pretty decent buy. Ethereum and Total didn't go on to make a new low, but Bitcoin actually did. So something to consider here. Came back to the buy it all line, another good buy. So the question is, given that we have this new channel and we know that USDC and USDC are diverging and we really only care about Tether right now, what can we expect from here and why would we expect it? Well, I think we should potentially prospect USDC USDT dominance, or this channel USDT as a ratio against the total, going to maybe 5.5%. Okay, somewhere up in here. And of course, just a reminder, this is flipped, right? So this is at this is 7%, this is 5%. And what this really means is if we see this happen and we see USDT dominance move up to this line, which would be the percentage going down, what this means is that people are deploying their stable coins. Now, there's a couple ways for the market to really start ripping. One, we see a new influx of liquidity. We see stablecoin market caps moving up across the board. Okay, USDT market cap moving up, USDC market cap moving up, DAI moving up, TUSD, all the stable coins. We basically get new fresh liquidity, new stable coins into crypto, and they start deploying them. Or we could see the existing stable coins, these bad boys, mainly USDT right now, which is currently or potentially sidelined right here, begin to get deployed. And if, again, this is inverted, okay? What that would mean is right now there's, the stable coin dominance, the USDT dominance, is representative of about 7.5% of the total market cap or total liquidity in crypto. And if this drops right here, if the USDT dominance moves down to maybe 5.5%, that means that people are putting their stable coins to work. They're deploying currently sidelined liquidity. Okay. So either we need new liquidity or we need the deployment of existing liquidity. Okay. And you can see how this channel has been basically mirroring price perfectly. Okay. I would say the one big difference I'm noticing is, we didn't get this right over here. We didn't get this, this bottom call where, this one we did. It is a little cleaner on the bottom. I will give it that. But given current market conditions, I just don't think it makes a whole lot of sense to really include or weight USDC into this channel or this equation anymore, because this one is a very clean channel as well. And what we're seeing over here is indicative of, really where we should be looking, which is Tether, not USDC. So real quick, let's talk about some price targets with, with Bitcoin maybe and with ETH. That could be fun. We'll go for just a few minutes here because, I want to look at, what has happened on previous moves here. All right. And it really depends where we're at. I don't think we're in a full-blown bull market right now. I really don't. I think that this could be a really solid pre-halving year rally, or just pre-halving rally that maybe stretches out into, into Q1. But let's take a look at like previous bear market rallies. All right. So I think this is a decent example. So we were right at that middle line, the yellow line, the mid-range, whatever you want to call it. And from here, we basically saw USDT dominance go from, depending on where you want to measure it, 2.3 to 1.5. All right. So from this middle line to the top. So we're at about the middle right now. What if we went to the top? Again, about 35%. You can see this is about 35%, 35%. So what happened with Bitcoin's price? Well, let's go down here and we'll take a look at it. So depending on where you want to measure it, I'll try to be fair. From here to the top, low 40s, low 40%. So what would that potentially mean from here? I'll try to be fair. I won't go all the way from the bottom. We'll just kind of pick a spot, maybe 20, 28K roughly. If we did the same thing, we went to 43%, that could potentially be a $40,000 Bitcoin. All right. I think that's a pretty decent example. And I also think it's potentially where we could be at in the cycle, where I'm not expecting like another black swan or something like this, but, I think this is pretty compelling as to where we could be, somewhere around here, before the bull market. You get a little bit more chop, maybe another pullback later on. But I think if we go to the top of this channel, our USDT as a ratio against total or USDT dominance, I think you could maybe expect something like this. All right. So I know there's actually a team member of ours that thinks we could go to 48K and take this liquidity out up here, which is interesting, which is certainly interesting. And here, let me see. We'll pull this up right here, and I'll show you why. So I think it's a very interesting argument. Let's see if I have this saved here. I think it was on this one. Pre-having fibs. Yeah, it was this one right here. So this was a thesis created by one of our team members where if you take a measured move on Bitcoin, and this is before the halving actually. So let me put on the, so this is the Bitcoin halvings right here. Each time before a Bitcoin halving, you could see that, we came back, or I guess before next cycle, this one technically wasn't, but before we really had blast off, you can see that from top to bottom. So bull market top, if you want to even call Bitcoin at $30 a bull market, I'd say maybe. I don't like going back this far. I think it's a little bit silly sometimes to evaluate Bitcoin when it was like $30, but top to bottom, we came back and we tagged in between the 0.702 and 0.786 fib, and then we had blast off. This one, you can see after the 2013 top, bear market bottom, you can see that before the halving, we came back, tagged this little sort of fib bracket here, and then we had blast off. Same thing here for the 2017 cycle, top to bottom. We came back before the halving. We hit this fib pocket, the 702 to 786, and then we had blast off. So he's got a thesis that, we could come all the way up here before the halving or sometime near, that'd be upper 40s potentially, which would certainly be exciting, and maybe confluent with this channel, we could certainly go more than this, that we could certainly go more than 43%. But I think this is a really noteworthy channel and something we should keep an eye on. Let's see one more example maybe. So from here, depends on where you want to measure, right? But here to here, again, 35%. So we'll just keep this on here. Roughly about the same if we went to the top. And if we took a measured move on Bitcoin from right here all the way until the sell it all line, that could be 300%, right? But it's cheating a little bit because if I moved it to here, then we're already, significantly off of that low. So there's a lot of ways to look at it, but just keep in mind, if we move to the top of this channel, things are going to get wild. Like we're going to absolutely tear, and this is going to be a move that it'd be tough to be sidelined for, because I know a lot of people are thinking, we're going to get another big pullback or big scare before, before the halving. That could certainly happen. Well, yes, it could, but what if it happens from up here? That's something people have to consider, myself included, is what if we move up to here? What if USDT dominance falls and, this is inverted, so moves up to the top of this channel, and then sometime around here, maybe right after the halving, we get a huge drop and we just retest this previous range high right here. What if that happens? So you get your big pullback, but you miss this huge move, because if we break out of this level right here, we could get that big pullback everybody's looking for. And then, maybe we move up like this or something like that. But this could be a good area too. You have to be open to everything. It's crypto, and I will just say this one thing that I have learned, and I have learned this the hard way over the years, is it's not safe to be completely sidelined in this asset class. Okay. I think it's always smart, if you believe in this asset class, to have a little bit of exposure. Okay. Unless we're at a very, very extreme point in time or the cycle, I think it makes some sense to always remain a little bit exposed, at least to Bitcoin. Okay. So just keep in mind, be open to all scenarios here. But you got to be careful here, because if we go up, if we go up from here 50% potentially, and USDT dominance goes to the top of our channel, just be careful, because then you'll be praying for a pullback and an opportunity to bid low 30s, and that doesn't mean go all in here, not at all. But I am saying we are seeing things holding support. Things look relatively good. Let's look at ETH real quick. Okay. ETH is, I mean, it looks pretty bad here, but technically we are holding some support. So it kind of depends on how you want to draw it. But actually, let's not do it. Yeah, let's do it not in log. So, I mean, technically we're holding support right here. Okay, this is support. It looks terrible. And there's a lot of ways to draw this. Do you want to draw it from, the bodies? Do you want to draw it from the wicks? I think let's just draw it from the wicks. Let's try to be as conservative as possible. And additionally, I was looking at this the other day, and we lost this breaker right here. And that was really ugly when we were down here. But it has since basically come back from the dead. And we are now back above that level. We have since moved back above that breaker. So something to consider is, if we're at support here for ETH, what's stopping it from doing something like this, at a minimum? And then maybe you get your pullback. I don't know. But if these stable coins, if USDT gets deployed here, you have to be open to all scenarios. Even if we want to do like a little goofy normie wedge here, right? What if some of those stable coins get redeployed here and we move up to 22, 2300, something like this? That's a huge move. That is a huge move. So I'm just saying, I just want everybody to keep an open mind, because, I've got the channel, I've presented the evidence, and if it does happen and we move from this midline all the way to the top and we see USDT dominance somewhere around 5.5%, things are going to get crazy, and they're going to get crazy really quickly. And crypto has a way of reminding everybody why we got into the asset class in the first place, because it's fun and it pumps, and when it runs, it's amazing. So guys, that's all I got for you today. My name is Max. I'm the CEO of Because Bitcoin. I hope you guys enjoyed this video. If you haven't yet, please consider liking this video as well as subscribing to our channel. We're going to start pumping out a lot more videos. And we also do have a live show every single day called Market Check. We're live every day at 10:40 a.m. Eastern time. It's a really fun show. So if you could check out the live portion on our channel, I have a feeling you're going to enjoy it. Big panel, lots of fun discussions, Monday through Friday, live every single day. Additionally, if you guys really enjoyed the content and you want to trade with me and the rest of the Because Bitcoin team, we provide exclusive analysis and trade updates in our Discord. The link to that will be down in the description below. So give that a try. It's really a good experience. It's growing quickly, and it's not really a signals group, but we do share all of our positions just for transparency, as well as, what better way to learn and educate yourself than to see the analysis that we're providing, and then also see how we're executing on it, because that's really where the money is made. Not the analysis, but the execution and the deployment. So guys, thanks so much for sticking around. Thanks if you got all the way here. I know it's a long video, 25 minutes or so, but I hope you found some use out of it. Please like and subscribe, and we will see you next time. Take care.